The bubble burst years ago, but the collapse of the housing market is still a huge drag on the economy. The administration has come up with some new proposals and one today to help some homeowners who are still underwater. Sean Donovan is Secretary of Housing and Urban Development and joins us now as the president wings his way to Las Vegas to unveil all of this. Mr. Secretary, thank you so much for joining us. First of all, I think there are 11 million homeowners who are underwater. How many will be helped by this plan?
Well, Andrea, we're still working out the final details over the next few weeks, but there are about 4 million homeowners who have a Fannie Mae or Freddie Mac mortgage, are underwater today, and have interest rates that are significantly above today's current rates. So that's the target population. They have to choose to refinance and come in. So clearly not all of those will end up getting the refinancing, but that's the target audience. But we also think that there's the changes that we're making today, which will simplify the refinancing process, bring down the cost, create greater competition in the refinancing process. Many of those steps that we're taking could also be applied to other mortgages. There are 6 or 7 million homeowners with Fannie or Freddie Mac mortgages that are above water, that have equity in their homes, and yet haven't taken advantage of today's low rates. This could be a real benefit to them as well. Say it's $5,000 closing costs to refinance. We could cut that in half and make refinancing much more attractive to a broader range of homeowners as well.
You're basically saving costs by eliminating appraisals. Is there any risk that you're adding to the system by eliminating appraisals?
Well, that's one of a number of steps that we're taking to streamline the process. We don't think it's adding any risk because, first of all, these mortgages are already on the books of Fannie Mae and Freddie Mac. We're actually making them safer mortgages because we're lowering the payments. The average payment will come down by $2,500 a year or more. That's a mortgage that's more likely to perform and to stay current in the future. But we're also making sure that where we have very good data for home sales in that neighborhood, we're going to use an automated process rather than the lengthy process and expensive process of doing a full appraisal. We can use this automated valuation methodology, which streamlines the process, lowers the cost for the homeowner, makes it more likely more people will be able to afford to refinance, but still assures us that we're going to have a good value for that home.
Mr. Secretary, the Washington Post has an analysis of the initial housing plan, the crisis plan, and suggests that only $2.4 billion out of $50 billion has been spent. Do you agree with that? And if so, why is it taking so long to address this crisis?
Well, Andrea, let's be clear about those numbers. We set up these programs in a way to hold the banks accountable. We weren't going to put all our money in right up front, even if homeowners weren't put in a place where they could stay in their homes long term. So we're making monthly payments only where homeowners are actually benefiting. We call it pay for success. And that's something that ensures that the money doesn't go for modifications or other changes that aren't going to be sustainable in the long term. So the number would be far larger than that. Even if no more people qualify for these programs, as long as they're successful in the long term. So let's be clear about that. But one of the things that we've learned as we've gone through this crisis is that the mortgage system that we had was so complex. We had sliced and diced these mortgages into a dozen or more different pieces. It wasn't clear who was responsible for working out the mortgages. We have lots of lawsuits between the various parties. So one of the things that we figured out is we needed to dig in, and the president pushed us to do this, and help to resolve, untie that Gordian knot, if you will, of so many of these complexities that are standing in the way of getting help to homeowners. That's what this announcement is about today. We dug in. There were 5 different barriers that we attacked. We brought the private sector to the table. We brought federal regulators to the table. And after months of hard work and pushing from the president, we've been able to simplify and streamline and fix many of those complexities that have stood in the way from these programs working better. So this is one example of how we can do that. And it's something that we need to make sure we continue to do in other areas to get this housing market moving.
Mr. Secretary, I didn't mean to interrupt. I know we're almost out of time, but I wanted to ask, do we know how many people will actually benefit from this? Gene Sperling on our conference call earlier indicated that you guys don't really know how many people might actually be helped?
Well, as I said earlier, we do have, there's a couple weeks before some of the final details are set by FHFA, and moving forward, we need to make sure that we hold the private sector accountable, that they step up and deliver on the changes that they promised to make these streamlining and other steps actually work. But there are about 4 million Fannie Mae and Freddie Mac homeowners that are underwater and could benefit from a refinancing because their interest rates are high. We're going to have to see how many of those actually sign up, come in and say, I want to get a refinancing, and are able to do it. And time will tell exactly how many can benefit.
Thanks so much, Secretary Donovan. Thanks very much for joining us today.